Well, hello guys. Welcome to our weekly outlook. Happy Monday. I know you guys are probably not used to seeing me on a Monday, but I did do the weekly outlook today instead of yesterday. But I'm glad that you guys are here. I am excited to get into the markets this week. If you can see on my screen right now, we're looking at the dollar index, Euro USD, USD Swiss franc, dollar yen, and oil. I was looking through the charts. I think these are going to be the best five setups to look at for the week. These are what I'm going to be trading, and I'm going to go over each and every one of these, give you my view. I just want to make a couple of announcements very quick, and then we'll jump into the economic calendar as usual. The only thing that I can think of is if you're watching this live, you probably don't see anything yet, but if you are watching the recording, the link will be in the description, and you will probably have seen a post on social media if you follow Positive Traders somewhere. But today I am going to be reopening Positive Traders, my Signal group that I closed back in December. For those of you guys that have been following me since that time, or even the past couple years that I've been running Positive Traders, back in December I wasn't really sure the direction that I wanted to go with Positive Traders, so I actually stopped my Signal group and just kept it open to my lifetime students and people that were already in it, and that's been closed ever since, and I've decided to reopen it. It's something that I enjoy doing. So like I said, if you're watching this live, you probably, or you aren't going to see anything in the description below other than the usual links, because I'm going to be posting something this evening about it, making a formal announcement, okay? But it's $49 a month, guys, if you want to be a part of that. And that's also going to give you access to my daily webinars with me and my students. So every single Monday, Tuesday, Wednesday, and Thursday, I'm doing a webinar similar to this, but it's a lot more interactive. We're going a lot more in depth. Usually they're a little bit longer as well, averaging about an hour long. And then of course we do live trading when it permits on there, and anytime there's a signal or anything like that, it is explained and taken on the live webinars. So just wanted to get that announcement out there. Other than that, it is the end of April, guys, so we are going to be getting into May. So I hope you guys all had a great month trading April. Me personally, it was very slow. I think this entire month I've taken 2, maybe 3 trades, so it's been a very sidelines month. There's been a couple missed opportunities on my end where the confirmation happened either when I was away from the computer or asleep. So but yeah, that's been the month for us. So, and overall, our year has been great. If you guys have looked at our MyFX book, we've had a killer year. Last month we did like a 7% return last month. So it's been a very good year so far if you go and check out the MyFX book. But I think that's enough announcements. Let's get into the value for today. Don't forget, if you're watching this, guys, please like the video right now. If you're watching this live, get out of full screen really quickly and just press that like button, and make sure you're subscribed if you are not, so that way you get notified as soon as I go live each Sunday. But this week there is quite a bit to talk about in terms of the economic calendar. The first thing that a lot of you guys might not know, and this is why I encourage you guys to stay in the mix. Make sure that you are aware of what is going on. You're trading in the world's largest financial market, right? Anytime you place a trade, you should probably know kind of what's going on around that time. So if you have not heard, it is Golden Week for Japan. Basically, their old emperor is being taken over by a new emperor. So it's basically, if you're in the U.S. here, pretty much anywhere else, like your president or prime minister or governor where you are, same thing. It's the emperor, person that runs the country, and it's the longest. They call it Golden Week, and it's the longest Golden Week since World War II. So just a fun fact. So basically, for the next 10 days, everything is closed in Japan. You can actually look right here. I pulled up the Bank of Japan's website so that way you guys can see it. It's not just me saying words. You can actually see what it is. So each day they just call it something. Actually, some days they just call it holiday, but it starts with today being Showa Day or Shawa Day. I don't know how to pronounce it exactly. And then it's going to go all the way until May 6th, which is just another day for Children's Day. But you can see that they have a couple different days here. So banks are closed from today until May 6th. So what does that mean? Well, it means you probably might have already gotten a letter from your broker. If you didn't, well, newsflash here is someone telling you what's happening. So I would not be trading the yen at all for the next 10 days, guys. There is just so much volatility. In fact, I saw some stuff today. And so this feed right here, when you guys are seeing the charts, don't forget that this comes from a broker. So you can see top left-hand corner right here, it says Oanda, which is a broker, a worldwide broker, but they are also out here in the US. But on Pepperstone, who is a regulated broker based out of Australia, if you are with Pepperstone, you probably saw they had like some crazy error where pound yen dropped like 400 pips today. And they're having to like fix it for all their clients. So, and that is of course from a lack of liquidity, but it's also server problems on their end. But it might have something to do with Golden Week. But basically, what I'm trying to say is I would not be touching the yen until Golden Week is over. Okay, being that banks are closed, financial institutions are closed. Basically, smart money is closed for the next 10 days. So we might see some crazy movement on yen pairs at the end of this Golden Week, okay? So just know that that's going on. In terms of regular news, when we always look at the economic calendar, I don't even have time to go over every single thing, okay? There's a lot of red folders this week, but specifically, this is a non-farm payrolls week, okay? Meaning that Friday, we have non-farm payrolls for the US dollar, so our usual infamous non-farm payrolls, unemployment rate, the actual non-farm, payroll number, and then average hourly earnings, all released at 8:30 a.m. Eastern time on Friday. And then before that, we have two interest rate decisions, okay? So Thursday, we have well, I guess we'll start with the chronological order, okay? Wednesday, we have an interest rate decision from the U.S., all right? From the Federal, or for the U.S. dollar, from the Federal Reserve, all right? So we're gonna see the Federal Meeting Committee open, or meet, and they are not, well, I can't guarantee it, but like 99% sure they aren't going to be raising interest rates. There's no, they are not raising interest rates, okay? It's basically guaranteed, all right? It would have to be like some weird, curveball. Anything can happen. I have to say that, right, as a little disclaimer. Oh, and as my normal disclaimer too, guys, I think I'll just start putting this in the description so I don't have to say this every single week, but keep in mind, guys, that these are just my views and opinions, all right? That none of this should be taken as financial or investment advice. Should just be taken as educational and informational purposes only. But they are not going to be raising interest rates, all right? And then we also have on Thursday the UK having an interest rate decision as well. And as I always tell you guys, just like I tell you with my students, that when you're dealing with a central bank that is not raising interest rates or changing interest rates, let's say, okay, because don't forget they can go down too, up or down, and they haven't changed in a while, well, then it's more important to focus on the statement that is also released. So you'll notice that anytime there's an interest rate decision, there is always a statement released, okay? So like look right here on Wednesday, federal funds rate, we see that, and then at the same time right there, FOMC statement. That's what we're looking for, all right? And then pound on Thursday, you can see they have the votes, bank rate, all that good stuff, and then they have a monetary policy summary, okay? It's all the same thing, okay? Every central bank will use different wordings, different verbiage. Even, as I've said before, every central bank will even call their interest rate something else. You can see Great Britain calls it their official bank rate, all right? You can see the U.S., okay? The U.S., we call it the federal funds rate. It's all the same thing, okay? It's all the overnight interest rate from one bank to another bank, all right? That central bank charges other banks, all right? Whether it's an intermediary bank, whether it's a central bank, no matter what it is. But as I mentioned, when they haven't changed interest rates, so for example here, the UK, you can see they haven't changed interest rates since August of last year. So, and there's been 5, and then Thursday will make 6 meetings since then. So basically, it's the markets have priced in that 0.75%. That's what I'm trying to say, right? There's no there's no expectations of it going up or down. So what you're really looking at is the statement to see what they say, if they have a more bullish or bearish outlook on the market, and then that's of course what's going to help drive price in the long run. And then Friday, non-farm payrolls. Okay, there's a couple other red folders you'll see sprinkled throughout this week. Some stuff on Tuesday, some stuff actually in about an hour here for the Chinese yuan and some the New Zealand dollar. But yeah, I'll of course work with my students on a day-to-day basis with that. I just wanted to point out the main big things. All right, and then as far as the charts go, let's get into the good stuff, guys. All right. First things first is I want to give you my opinion on the dollar, okay? I am expecting the US dollar to find some weakness this week, all right? And actually, very quickly, before I even jump into anything, I want to recap last week, okay? I want to go back and I just kind of want to recap last week because I specifically, there were 4 pairs that I covered last week, all right? I had Euro USD, USD Swiss franc, pound dollar, and I can't remember the 4th pair. I think it was either dollar. Yeah, I think it was dollar yen here. Yeah, I had these 4 pairs marked off on last week's outlook. This was the whole time I spent last week was talking about these 4 pairs, and I was explicit about Euro USD. All right, on last week's webinar, we were in this bear flag on Euro USD, and I explicitly told you guys that there would be more downside on Euro USD. It was clear as day from the breakout that we had from the previous week right here on April 17th on the break of this trend line. And there was more to it, of course. It wasn't just as simple as break. I mean, it was and wasn't at the same time. There's a lot more that we were looking at. But recap, we can see where it's dropped from last week. Last week, it did like a nice 130, almost 150 pip drop on Euro USD. So there was opportunity to capitalize on there. And then, of course, everything was biased for buying the US dollar last week, right? Because I was selling Euro USD, I said USD Swiss franc should go higher. We actually didn't see a lot of movement on USD Swiss franc last week, but it did continue to move higher. I said explicitly pound US dollar back when it was actually sitting on this bear flag right here. I said that this was free money to the downside, and you can see that dropped very nicely over 100 pips after last week's webinar. And then dollar yen didn't really move much. We were actually looking at this. We're going to come back to this pair just because it's still where it was pretty much from last week. I did expect some upside on dollar yen because it would only make sense, right? If you're looking at selling Euro USD, buying USD Swiss franc, selling pound dollar, it probably only makes sense that you should really be looking at buying the US dollar versus the Japanese yen because that's all correlative to a stronger US dollar last week. And we actually did see that last week. We did see a little bit of a pop-up, and we talked about this. If you're one of my students, we talked about this bit of a fake out at these highs here. And so, yeah, I just wanted to do a big recap. Main thing last week, guys, the main achievement from last week is Euro USD. All right, I even said on last week's webinar explicitly, probably just how I'm saying right now, and I'm being so direct and clear that Euro USD was a sell. I was the same way last week before this drop ever even happened, So for those of you guys that only watch the first 5 minutes of this and only watch the first 10 minutes and you get bored or distracted just because the average human has can pay attention for less time than a goldfish, right? Our average attention span is less than 8 seconds, all right? And it's actually getting lower and lower as technology, makes it worse and worse for us. So for those of you guys that can't pay attention for this whole thing, you guys are seriously missing out on free value, okay? If you hop on here for 5-10 minutes, you're not watching the weekly outlooks, okay? You can't even try to say that you are. All right, if you're sitting on here for the whole thing, taking notes, then you're watching the weekly outlook and you're getting results out of it, okay? Zero excuse why anybody didn't get any results last week if you watched the weekly outlook, okay? Because if you didn't catch your USD with how explicit I was, you could have caught money on USD Swiss franc, you could have caught money on pound dollar, you could have caught money on dollar yen, okay? But this week I have changed my bias, okay? As I always say, the markets moves in waves and we're having a bit of a corrective period on the dollar index. It already started to happen. Obviously today is Monday, not Sunday, so we can see that the start of this week has already seen some downside. I called this yesterday with my students. I said that we'd see some downside on the dollar this week. and I believe it'll continue. So what does that mean, right? So as far as trading opportunities, what does that mean? Because a lot of you guys probably, your broker doesn't allow you to actually trade the dollar index. So what does that mean? It means that I would be looking for buys on Euro USD, okay? It's already happened a little bit, but I think this correction will continue, all right? Last week, if you don't know, we broke not just 2019 lows, but we also broke 2018 lows. So we broke an extremely strong level of support. You have to keep in mind that there's going to be a lot of volume at these levels, at these extremes. So very rarely are you just going to see it like push straight through. We're generally going to have a correction, and that's what we have happening right now. In my opinion, though, I wanted to give my opinion, my directional bias, in case you guys are trading Euro USD. I don't think that it's the best risk to reward, though, because if you're going to buy Euro USD, it already has popped up a little bit. If you didn't get in like 30, like about, you can see where I started drawing with my ruler, like 40 pips lower. If you didn't get down here, get into a buy down here last week, then it's going to be a little bit hard to get a good risk to reward. I think right now buying, because generally speaking, if you're going to buy Euro USD right now, the best thing to do would have your stop loss below last week's lows. And if you look at that stop loss, 75 pips, that's a pretty big stop loss on Euro USD, especially when you're looking for, a good risk to reward. So if you're risking 75 pips, you're looking for 150. So if you measure 150 from right now and you just measure 150 up, that's even going back above 113, which we know 113 is an extremely strong level, right? We've been literally following 113 since last year when we first got to this level, and then after, between October and December, it created a pretty significant level of support, all right? And then which turned into resistance on the retest back here in the beginning of this month, okay, or middle of this month, April. So chances are we probably, basically what I'm insinuating is that Euro USD probably will not see price go higher than 150 pips really anytime soon. So I think that risk to reward is probably not the best. But what I think you can trade is the correlation. And this is what I'm going to trade. Is I'm going to trade the correlation between Euro USD and USD Swiss franc and them having a negative correlation, okay? And I want you guys to pay attention because I think USD Swiss franc is probably one of the best opportunities right now. All right, so just like Euro USD, the inverse Euro USD broke yearly lows. We broke yearly highs, not just last year's highs or lows, but 2018's highs and lows respectively on Euro USD and USD Swiss franc also. So for USD Swiss franc, we broke the multi-year highs. And like I said, we're always going to have a lot of volume at the extremes. So what do you do when price is at extremes? You don't just blindly sell, okay? So what I'm about to explain on USD Swiss franc right now isn't just as simple as we're selling USD Swiss franc just because it's at the highs, okay? Although, sometimes there is an argument to do that if you can just get a good risk to reward. We are getting reversal patterns, and we actually started getting reversal patterns last week. So I'm going to drop it down onto the 1 hour, which I don't normally do unless I'm like with my students or taking trades, intraday trades. So I very rarely go down to this low of a time frame on these weekly outlooks, but I'm going to just to illustrate my point, just to prove my point. So you can see this is last week, okay, early last week on USD Swiss franc. This was breaking 2018 highs and 2019 highs. So we were at the extreme. We were at a huge rally, like a 7-8 hour period. We pushed up like 70 pips, which is big for USD Swiss franc, right? Don't forget, we were consolidating for almost an entire month, right? From like March 20th to April 15th. Almost an entire month we were in this just sideways move, and then the past week has been just a crazy move to the past 2 weeks actually have been like a crazy move to the upside on USD Swiss franc. Anyways, that's not what I'm talking about. What I'm talking about is just showing you, kind of price action and where the highs are. And what's key to look at, guys, is how quickly price rejected off of the highs, but not just how quickly price rejected off the highs, is once we got back up to the highs, and we've actually done it about 5 times now, how strong the rejections at the highs have been. I'm going to mark these off with some boxes just to illustrate the point, right? First one's right here. second one's right here, third time is right here, fourth time is right here. And the fourth time is actually what gets a little interesting also, because if you notice, this is kind of like, some people call it, there's so many words: a breaker, a spring, a liquidity grab, whatever you want to call it, a fake out, so many words for it. But if you see where we went up to the highs, we actually had broken the multi-year highs that were made. So this high was already a big enough deal, and then we went and broke those higher highs and then immediately came back lower, and then we're also doing it right here. All right, so in terms of what I see in the market, again, guys, this is just my opinion, sorry, that wasn't supposed to be there, is a reversal pattern on USD Swiss franc. The 1 hour supports that. The 4 hour, some people might say, well, that's just a giant bull flag that it's in right now. And while that is true, you have to, this is the point where correlation comes into play, right? I already see the dollar index breaking last week's support. Okay, it already has. You can literally already see in the past 8 hours, the dollar index has already broken last week's lows. Okay, so the dollar index is already hinting at more downside. It might not be clear on US to some of you guys, it probably is very clear. Even here on the daily, this should be to you screaming a sell. All right, but if it's not clear enough on USD Swiss franc, you want to go and you want to look at the dollar index, and if these have a positive correlation to each other. So we see downside happening on the dollar index, and this downside should continue, and so that should give us an opportunity. And then also, of course, the inverse to Euro USD, right? We see Euro USD breaking above this consolidation from last week, and finally getting above there, right? Breaking the resistance of this consolidation. So that should continue going higher. So what has to happen with USD? It doesn't have to happen, or what is a good chance of happening with USD Swiss franc if we're seeing Euro USD go up and the dollar index go down? Well, we should see USD Swiss franc follow the dollar index with that USD weakness and move lower. All right. So I think a short position on USD Swiss franc would be a really good option as far as a correction goes. If we just kind of drop it onto a lower time frame structure, say the 4 hour here, ignore this big blue box, okay? Because if you guys follow all my boxes, you have to know what to ignore and what to kind of keep in mind, because this blue box isn't super relevant right now, because all it's doing is basically it's visually representing where parity is. It's not necessarily, and it's obviously like this major level of resistance in the past, but you can't really define this as one, like, really, like a specific area of support and resistance. It's just a general zone. So I'm going to look at the lower time frames. And what I'm going to look at is I'm going to see this previous consolidation that we broke out of. Okay, so because when I see the market, it's kind of like on my screen right now, it's in a couple different things. All right, so it starts with this box right here. I'll make it orange, let's say. If I copy and paste this, I see that section of price and I see this section of price. All right, and I know that, pretending that none of this was here, all right, that there's going to be buyers in this area, okay? So hopefully you guys can see where my cursor is, this left small box that we broke out of, all right? When there's this bull flag, when there's this consolidation on the 4 hour here, okay, back when this is happening, there's going to be a lot of buyers, all right? And those buyers are going to be in profit right now, all right? Keep in mind, if you buy dollar USD Swiss franc, if you're buying this pair, you're also getting paid a positive rollover. Okay, if you don't know what rollover is, it's what the broker either pays you or charges you when the new daily candle opens. Okay, it's basically a charge or a reward for basically interest for holding a position. And depending on the interest rates of the countries, so between the US dollar and Switzerland, and what they decide their interest rates to be, is determined on if you get paid or if you get charged. And in this case, if you're long on USD Swiss franc, you actually get paid. So you get rewarded for holding longs. So for people for you guys, you probably don't care, right? Because you might be trading with I'm not trying to talk down on you guys, but being real and just looking at the average, most people aren't working with big accounts, okay? So you might not care if you're only like working with $1,000 or a couple $100s, or even like, even if you're working with like $10,000, you might not care that much, okay? You might not even know what swap is, all right? Or you might see it and it just might not matter to you because, again, you don't have a lot of money. But when you're trading a six-figure account, or you're trading, let's say you're in the shoes of a hedge fund manager, or somebody that is managing not millions but billions of dollars, you start to look at things like swap, okay? And so it's very advantageous, basically. All I'm trying to say, guys, is very advantageous to be on the side of the market if that is swap, okay? Or that pays swap. So where this all comes down to is that buyers of this bull flag, they're going to have stop losses, just really simple, have stop losses just below the support of these bull flags, right? Because people are going to take a stab here. People are going to want to get lucky in this area. All right, and then they're still going to have their trades running and expecting USD Swiss franc to go to the moon, basically, because it broke out of the 2019 highs. All right, this all comes together. Hopefully, you guys are putting all these pieces together. All right, so as in terms of a market maker, if you're a bank or a market maker and you know that there's going to be where a lot of stop losses are at, it's probably advantageous for you as a market maker to drive price to the stop losses so that you don't have to give anybody else money. You can take money from the retail traders. All right, and that is why, guys, that the Forex is such a ruthless game, is because if you right now if you don't use risk management and you're consistently blowing account over accounts, that is why Forex survives. Okay, that is why it's a thing. It's because the banks love retail traders, guys, because they can go in every single day without fail. And there's going to be idiots taking trades I'm not calling any of you guys idiots, but there's going to be idiots out there taking trades for no reason, okay, and just giving money to the brokers, which is obviously the brokers get their fees, right? The way brokers get money, if you don't know, isn't necessarily by winning or losing trades. Okay, at least a good broker does not make money doing that. Okay, because there's a difference between A booking and B booking. All right, that's the simple term. And basically, B booking is very illegal under regulation. Okay, you're not allowed to B book. Basically, taking the opposite side of the trade. But anyways, all you need to know is that brokers don't make money. Good brokers, like legitimate brokers, don't make money off of your wins or your losses. They make money off of the commissions, okay? That the whole reason you have a spread is because that is going into the broker's pocket, okay? So the money when you have a losing trade, that's going straight through. If you've ever heard of STP, straight through processing, or ECN, it means it's going straight through to the liquidity provider, okay? Liquidity provider is just another fancy word for a bank, okay? So if you're a bank, you want to drive price to where the stop losses are. And by the way, if you don't know, banks literally wake up in the morning and can see where everybody's stop losses are, how many people are long, how many people are short. And I'm not just talking like a sentiment a meter, guys. I'm not talking like the banks go to dailyfx.com and they go to sentiment here, and then they just look at how many people are long and how many people are short on Euro USD. No, okay, this doesn't really mean anything, okay, because you aren't getting the full spectrum. They can see where everybody has their stop losses. They can see where everybody has their take profits. They can see where everybody has buy stops, sell stops, all the limit orders, all the stop orders, everything. And that is why the Forex market is the most manipulated in the world, is because we as retail traders only have the charts to look at, and the people that are against us, banks, have all the resources in the world. So we already don't have the advantage. So you got to use good risk management. But anyways, just back to USD Swiss franc, basically price, in my opinion, I believe that price should drive lower. And as far as a target goes, a good target would be taking out these lows, okay? So the reason why I think that this would be a good trade is because I think that you can still get a good risk to reward, because price going down to this area isn't hundreds of pips, isn't like the 150 pips that we need on Euro USD. It's only 65 pips that we would need to get down to price. So for a good risk to reward, we'd be needing to look at no more than a 33 pip stop loss, because that's half of 66. And so we look to see if that's doable. If we had a stop loss or a take profit down here, can we get away with a 33 pip stop loss that's well above? And we can see if we do have a 33 pip stop loss, that's going to be, above the highs. Not above all of the highs, so I might actually look at moving my stop loss just a little bit and just reducing my risk to reward. Yes, that would get me below a 1 to 2 risk to reward, but and I've told you guys this before if you pay attention, or especially my students, that taking 9 trades with a risk to reward above 2 and then taking 1 trade with 1.5 risk to reward is fine. Okay, as long as you don't make it a habit, as long as every trade of yours isn't a risk to reward ratio under 1, if you have 1 in there once in a while, it's not the end of the world. Okay, so that's what I think we could look at on USD Swiss franc. Also, that could be played out on an intraday setup as well. If you weren't a big fan of like those bigger swings, like a 66 pip, holding it for 66 pips, then you can look for something smaller. Okay, but that's me elaborating a little bit. And then also we can see on the daily, also if we just literally just look at the naked charts, we can see such a taper from the week previous, right? Like look at the past couple of daily candles in comparison to what happened for a couple of weeks. All right, just a huge rally on USD Swiss franc and then nothing. It just stops dead in its tracks, coincidentally at highs also. All right, so it's not just all those highs being rejected on the 1 hour, all those green boxes that I drew, but it's goes even up onto these higher time frames as well, of seeing price action slowing down, seeing the sellers start to pick up a little bit more, basically put up a fight, and buyers just lose all control in this area. All right, so that's what I think will happen. Euro USD will go higher as well. A dollar yen should go lower this week. All right, if we're gonna play the correlation with Euro USD going up and USD Swiss franc going down, and just an overall negative sentiment for the US dollar, then it's going to make a lot of sense for dollar yen to move lower this week. Also, as far as like just independent analysis, if we aren't looking at correlation to anything else and just taking dollar yen for face value, this tells us a lot. All right, the fact that we broke up higher last week, broke this bull flag, which was expected. I think a lot of people made money on this buy because it was pretty clear. But I don't know how many people actually kept that money, because it did go back to where a break-even point would be, or even negative if you didn't put your trade at break-even if you had bought. And then we can see we actually immediately, this is just a very like textbook scenario, guys. You guys should definitely take notes with this sort of situation. We break the highs, a huge rejection, right? Or I'm sorry, a huge correction, huge fake out. You could even kind of see that there is maybe that this was already hinting at a fake out just from the first 4-hour candle. The fact that there was such a long wick to it, you can see that was confirmed by a pretty big sell-off. And then we went as far as breaking the lows of that consolidation, and right now we're consolidating around the lows of the consolidation. And what's interesting is this specific 4-hour candle, this huge 4-hour candle from the end of last week. I believe that, yeah, that's the end of last week. We actually went back up into this original zone where we were consolidating before the break higher, and then pushed back lower. All right, this is almost like a form of a last kiss, if any of you guys have ever read the book Naked Forex. And then we have just price tapering off a little bit. It's been a little volatile the past like 24 hours, we can see, but still the theme is very largely to the downside, and I think there's going to be some good opportunity to sell dollar yen over the next couple of days. Okay, and also just in terms of kind of price overall with dollar yen, okay, it's actually very simple to see where we're at visually, because you can just know that wherever the flash crash was, that was the beginning of this year. That marked off actually the first business day of the year, okay? So it wasn't the first actual day, January 2nd was, but keep in mind January 2nd was a Sunday, so the first business day of the year, meaning Monday through Friday, January 3rd was a Monday, and price got super volatile on that day. And ever since then, we've just been in this pretty huge correction phase on dollar yen. That was called, okay? I took a trade just to kind of add some credit. Let me just show you guys. All right. So I think some of you guys probably just like think I'm just calling stuff randomly. Like, you guys, I have a method to my madness. I call everything. Okay. Look at this back here, right here. I said catch dollar yen correction, January 17th, 2019. Me and my students bought. All right, it hit our target easily. You can already see target closed, target reached, 110 reached. Retracement could extend higher, but overall bearish on the pair. Now that changed a little bit because obviously you never know, right? I don't have a crystal ball necessarily and can see exactly where price is going or know exactly how complex a correction is going to get, but you can see by just paying attention, taking notes, understanding what's going on with central banks, understanding correlations, looking at simple price patterns on the chart. I'm able to find setups, and that is how I profit, guys. It's as freaking simple as that. I just stay consistent. That's it. Some of you guys have been following me on these weekly outlooks for 3 years, and you wonder how I do it. But you're sitting over here still putting $200 in your account every freaking month with the leftover money from your paycheck, and then blowing it not even 3 days into the new week because you're freaking greedy. That's it. All right. The only reason I'm still here 3 years later, still doing my thing with positive traders, is because I'm not greedy, guys. Because I have a mindset. I have a powerful mindset that I understand the long-term power. All right, so sorry to rant a little bit, but just to show you guys, I called this buy. We caught this buy. This is the daily charts. These are some big candles. We caught this buy on dollar yen. I knew that it was going to correct higher. I've been calling this correction for a long time. Obviously, I didn't know. Did I know it was going to get super complex like this? No, but that's why we play it by section, right? When price gets to an area where we know it's going to get to or has a high probability of getting to, then we reevaluate price action. All right, and this is what I teach, guys. Like, this is what me and my students, what I go over with me and my students on a daily basis. So if you, I'm not to sound salesman or anything, guys, but if you have literally been struggling, if you just don't know how to put the puzzle pieces together, it's because you're learning from the wrong person. You don't have the right information. All right, you might have some information, but you don't have it all. All right, this is what I teach my students on a daily basis. All right, I don't know any other mentor getting on Monday, Tuesday, Wednesday, Thursday, 4 times a week, 52 weeks a year, over 200 times a year with their students, just hopping on, trading with them, teaching them, learning, making sure people are getting it, all right? So that's just to kind of prove my point that I have a pretty good idea of what's going on with the market. And that's just one example, guys. This is public. My profile on TradingView, everything that you guys just saw, all of these ideas are public. You guys can go and see all of this. All right, these are actually my 2 biggest winning trades this year, by the way. All right, this trade right here, I made over 7% on. Okay, this is me and all my students. All right, this analysis doesn't look as good because my analysis got posted after the fact, because one of my goals for this new year was to use TradingView as my trading journal rather than writing everything down and losing a million pieces of paper and just having a journal filled with all old ideas. It's cool to be able to scroll through this. I can go, it's all organized, it's all the same. So this one I was a little bit late on, but we caught it. We made over, you can see 3.64 risk to reward, and we risked 2% on this trade. So we risked 2%, made 7.2, didn't close early, didn't do anything, ran it all the way down to our take profit, made the full 200 pips on this trade, and caught USD CAD. Also posted this analysis a little bit late, but obviously you can see where we entered at the top and ended up moving down. We took our profits all the way at these lows early. You can see my take profit didn't get hit for a lot later because USD CAD decided to range. But yeah, we caught this, and you can see this risk to reward. So you can see my average risk to reward is really high. So that also goes back to prove that taking one trade here and there with a risk to reward of 1.5 isn't the end of the day, or isn't the end of the world. Okay. And then so you guys can go and see all literally. Actually, I apologize. Some of these are locked. Some of these are actually locked, but you can go and see all the public stuff because they're signals that I give out to my group. So if I post it publicly, basically would be giving out like free signals, which is just reserved for my group. So it's not locked, but it's not public, but it is. Obviously, I keep track of what I do, guys, so I can go and show you in the future. All right? And if you're not trading, let me just say this, guys. If you're not treating your trading like a business, you're not doing things like this, you're not keeping track of your trades. Guys, if you're any more than a month into trading and you do not have a trading journal and you're not, like, how do you expect to get better? Like literally, how does someone in life expect to get good at anything if you're not looking at your losses or your failures in anything in life, seeing what you can do better and learning from them? Okay, you have to be learning from those guys, okay? All right, so that's a little bit of mindset. That's a little bit of education, guys. It's definitely going over the news for the week. Let me plug in my phone very quickly. I look at the live stream here on my phone so I can answer any questions, and my phone just died about 5 minutes ago, so I'll see if that will power up very quickly while I finish this off. If you guys have any questions, please feel free to leave them in the comment. I will get back to you guys, but if you've made it this far in the video, please make sure you leave that like button, guys. You know, if you're just hopping on these webinars and you're watching these for a whole hour and you're getting all this value, and you're taking, you know, do a favor and give back a little bit and just like the video. All right, it helps to go to other people. And it motivates me, guys. You know, I cannot tell you guys how many times, you know, I'm just going to give you a little opening into my like personal brain here. I can't tell you guys how many times I have wanted to just stop doing these weekly outlooks altogether because, I mean, it's a very big commitment and it's as simple as that. You know, getting on every single week. You know, I can't even remember the last time I didn't get on. Even if I get on Monday, I'm still staying consistent. All right, I get on here every single week for you guys, do these webinars, you know, not asking for anything in return. So a like on a video, one video would be nice. Make a YouTube account if you don't have it, that way you can subscribe too. But I think that's enough self-promotion. I got my phone turning on right now so I can see if there's any questions. But overall, I hope you guys understand me very clearly that I think Euro USD is a buy for the week and USD Swiss franc is a sell for the week. And I think dollar yen is also a sell for the week. All right, let me pull up the live very quickly, see if anybody has any questions. Okay, Naked Trading. Casa, you ask, what was the book again? The book is called Naked Forex. As far as a link goes, just Google it. Just Google it. All right. Looks like that's it though. Looks like pretty quiet chat today, but I appreciate you guys being on here. Students, I'm actually gonna run a very quick poll for my students. If you're a student, go into the private Telegram. I'm gonna see if you guys want me to do a webinar or not tonight because I'm doing one right now, but I will still gladly do it if we get enough yes votes from you students. Other than that, that is it, guys. That is going to be a wrap, okay? So I appreciate you guys. Have a great rest of your week trading. Stay safe out there. Remember, anything with you, use it with good risk management. And traders, I will see you guys next Sunday. Take care, guys. Have a great week.